The key question facing today's investors is how to read the signs of the times when it comes to Tesla. Sure, things have improved, but there's still a lot of fear in the market due to Elon Musk's actions on Twitter, inflation, and interest rates, among other negative pressures on the stock. Nevertheless, some market watchers, such as self-described Tesla bull Cathie Wood, predict a sharp rise in Tesla's stock price at the beginning of 2023. If accurate, this is a chance that no Tesla owner should miss. The truth about Tesla shines through the shadow of rising interest rates and inflationary pressures, but the shadows are not dispelled by it. The Federal Reserve's interest rate hikes have been blamed for declining stock prices, and some investors fear that a recession may strike the U.S. in 2023. The creator of ARK Investment Management, according to Cathie Wood, the current recession may come to an end in 2023. Wood anticipated in late 2022 that the U.S. would exit its recession by 2023, even though many strategists and economists had questioned the existence of the U.S. recession and thought it may start the next year. ARK Invest's chief executive officer, in a CNBC interview, Cathie Wood acknowledged that she had underestimated how bad inflation would be. She went on to say that the U.S. economy is probably in a recession right now and that inflationary pressures are far higher than she had predicted due to supply chain disruptions and geopolitical issues like the Ukrainian crisis. By mid-2022, she added, a recession caused by poorly managed inventories, like the one that followed Kobe, would likely recur over the next 5 to 10 years. Wood also went on to describe the history of invention in the U.S., asserting that the current era is unprecedented. Music futurist at ARK Investment, in order to identify the most revolutionary discoveries in history, Brad Winton conducted research analysis and consulted with academics. Wood pointed out that the United States is currently going through a period of great innovation, which resulted in inflation that peaked at 24% in June 1920 and fell to 15% in June 2021. The United States went through a difficult period before entering a period of prosperity known as the Roaring Twenties, according to Wood. She also stated that the cloud did not become a reality until the administration of Amazon Web Services in 2006, and she also dated the administration of deep learning and artificial intelligence to 2012 at the earliest. In 2003, the cost of sequencing the first complete human genome was $2.7 billion, requiring 13 years of computing power. Even if the price had been lowered by 75% the following year, this would not have been feasible to afford, even if the cost had been lowered by 25% the year before. As a result, the previously $2.7 billion price tag for sequencing a single human genome has been reduced to approximately $500 in a few hours of processing time. Although challenging, the possibility of making groundbreaking medical discoveries makes the work worthwhile. Cathie Wood is developing platforms that appear to be evolving simultaneously. Multimix sequencing, which includes not only DNA but also RNA, proteins, and methylation, has replaced the older term DNA sequencing. This past week has seen a significant advancement in what another innovator would refer to as robotics. According to Wood, this is because the cost of industrial robots has been falling sharply. The labor shortage is growing, and innovation is the key to finding solutions in today's economy. Additionally, consumers are adopting energy storage technology, not just because of the rising oil prices brought on by the Russia-Ukraine conflict, but also because these new vehicles are becoming more environmentally friendly. Finally, she stated, I have to tell you the developments in AI are mind-blowing good. Remarked we're looking as far ahead in developments we can. Cathie would wrap up by bringing up ChatGPT, a program created by OpenAI and released to the public in November 2022. It is built on the GPT 3.5 family of large language models from OpenAI and is optimized through supervised and reinforcement learning. Tesla is involved in 3 of the 5 developments that would be mentioned. Combined effects of rising interest rates and concerns about declining demand for electronics to cut production in order to clear stocks. This was carried out so that those who received a brand new Model 3 or Model Y in the U.S. before the end of the year may receive a one-time $7,500 discount and free supercharging for 10,000 miles on January 1st. Thanks to the Inflation Reduction Act, federal tax credits of up to $7,500 will be returned for specific EVs. Investors are closely observing delivery statistics to see whether Tesla can maintain its rapid expansion potential. Shipments worldwide total 427,760. According to 16 analysts surveyed by Bloomberg, this prediction is higher than the record 343,830 vehicles delivered in the third quarter. However, This estimate excludes some of the most recent analyst projections. As the industry leader in electric vehicles, Tesla stands to benefit from tax breaks offered by the IRS for manufacturing battery cells and assembling electric vehicles domestically. However, the business has revealed that it will just barely miss its goal of increasing yearly deliveries by 50% by 2022. Therefore, in order to achieve this goal, the corporation probably has to give up part of its gross margins. According to 24 prominent brokers, Tesla has lowered all of its prices in China, but planned maintenance at its Shanghai factory is still ongoing. FactSet, a financial data organization with over 40 experts who follow sales, has anticipated a decrease in delivery times over the previous few weeks. The first quarter of 2023 is expected to witness sales of roughly 420,000 units on Wall Street. The fourth quarter consensus projection for Tesla stock was approximately 430,000 units by December. However, predictions for the stock peaked in the summer at about 450,000 units. Investors will probably be happy with a sum of about $420,000, up from $1.3 million in 2022. Projections for Tesla deliveries in 2023 range from 1.8 million to 1.9 million. Tesla is able to fulfill its 2023 delivery targets. It will significantly help persuade investors that the company's profitability estimates for the previous year are realistic and that the stock's recent slide might have been exaggerated. Given the stock's current cheap price and the fact that several critics predicted the stock would rise to $30 per share at the beginning of the year, now is a great opportunity to buy Tesla stock. According to Nicholas Cole's data from Trek Research, investors began to recognize on January 3rd that Tesla is now formally a car company and may thus merit trading like one. This meant, in Cole's opinion, that the company is only worth $30 per share, or 72% less than even at its lowest point. Coolest used the following quotation to elucidate his thinking. The market capitalizations of General Motors and Ford are $49 and $45 billion, respectively. With a $396 billion market capitalization, we can argue that Tesla is worth GM, and Cola stated that the man could not have been more off, adding up to a market valuation of $94 billion that would value Tesla shares at $30 per share. We'll have foreign investment game betting on the guy if we ignore the doubters and trust the process. Let me ask Elon again. Will you buy more Tesla stock? Please respond in the comments section below. Don't forget to hit the like and subscribe buttons for more videos like this. I'll see you in the next one. Music.